important. Now, my next guest is the co-founder of the private equity firm Blackstone Group. Now, when Blackstone went public in 2007, he became a billionaire, but he worked quite hard at it. He also served as a Secretary of Commerce under Richard Nixon, as well as the former chairman and the CEO of Lehman Brothers. And now he's written his memoirs, The Education of an American Dreamer, where he explains how the son of Greek immigrants who grew up during the Depression went on to become one of the most successful and wealthiest of men in America. Pete Petersen, welcome to Taking Stock. Good to have you with us.
Thank you, sir.
In today's interview that President Barack Obama had with Bloomberg's Al Hunt, he talked about the inherent risks of having so much U.S. government debt held by foreign governments. He also talked about how this was something that's a problem for the future. Do we have a lot of time to resolve this problem?
Well, I'm delighted to hear the president say that, because if there's going to be another crisis, and it could be a super subprime crisis, it is most likely to be in the foreign exchange markets, where the foreign lenders look at not only the short-term outlook of $2 trillion deficits, but look further ahead at the liabilities from the entitlement programs that are totally unfunded, and they look at our lousy low savings rate, and they say, you know, this situation is going to get better. It's metastasizing. So I think there's a very, if I had to name the number one risk of the next problem, it would be that the foreign lenders take a look at this situation and decide it's too risky. Then the question is, what can we do about it? And one of the reasons the foundation I've set up is focusing so much on this. Nothing would be more confidence building than having a program underway to do something about the long-term problems like Social Security and Medicare and some of the other completely unfunded promises. Because if they study these programs, and they will see that where the public debt that we all hear about is about 11 trillion, the total liabilities and the unfunded promises are 56 trillion, or 5 times bigger, 4 times the size of the GDP, debt per household of $480,000, 4 times the debt that people now have in their households. And when you start looking at those numbers, you say to yourself, if our saving rate doesn't go up dramatically, if we don't start reforming these programs, the current deficits will look like petty cash.
When you talk about this debt burden that exists not only on the books but off the books as well, what is it that you think government can do to help assuage the problem?
Well, since they're unfunded, you don't change them. You're going to want to fund them. They've only got 2 sources of money. You can, 3 sources. You can increase taxes. Let's see how much you'd have to increase taxes. You would have to more than double total taxes in order to meet these obligations. That's unthinkable politically, economically, and in my opinion, morally. How could you slip a check like that to our own children? In terms of increasing taxes, let me give you one number. If you take all of the Bush tax cuts, and remember, they're not talking about eliminating all the Bush tax cuts, only those going to fat cats like myself, perhaps you, I don't know. But if you got rid of all of them, it's about 1% of the gross domestic product. How much is the increase in entitlement spending for Social Security and Medicare related programs? 9% of the GDP. So the thought that we think we can solve this problem just with tax increases, when we're already increasing taxes on the well-off, you know, on the marginal tax rates, is just not realistic. We're going to have to reform benefits, which is a nice way of saying cut benefits. And that's where the more important part of the adjustment has to take place. But at the moment, it's considered politically incorrect, if not terminal, to discuss taking anything away from anybody. So we come back to the first question you raised. Will it take a crisis to get us to do something? And that crisis, in my opinion, would be a very, very costly one, would be if the foreign lenders lose confidence.
All right, we're going to continue the conversation more with Pete Petersen about perhaps the loss of confidence in U.S. government debt, what that means for the U.S. dollar, and what consumers and taxpayers can do about the debt burden.
Saving more will imply a lower growth rate as we go through an adjustment period. We all know there's a clear trade-off between stimulating the economy on a short-term basis and saving more.
This is Taking Stock on Bloomberg. I'm Pim Fox. That was Vikram Pandit speaking from Detroit yesterday at the Detroit Economic Club Summit, talking about the trade-off between going into debt and the need to stimulate the economy and also save more. My guest now, Pete Petersen. He is the co-founder of the Blackstone Group, the author of the book, The Education of an American Dreamer. Pete Petersen, you heard what Vikram Pandit had to say. Is there a trade-off between savings and consumption that we're not prepared to make right now?
There's a trade-off on the consumption side in the short term. But the idea is that growth comes from investment, and investment comes from savings. And if you don't save, and all you do is consume and try to borrow it, and keep in mind these entitlement programs I'm talking about are all about consumption. They have nothing to do with the future. Senior citizens like me are not about the future. We're basically about the past. So I think the solution to the problem is to simultaneously reduce those programs for the elderly, and you're going to have to increase taxes to some extent as part of the process. But in the meantime, try to think through how we can encourage people to save more, because we simply must save more as a country.
If you talk about trying to create incentives to saving more, does that contradict much of what we've heard out of Washington trying to reinvigorate consumer spending in order to help the overall economy?
Yeah, I'm trying to focus on the longer-term picture rather than what happens this week. You might be interested in a commission that I chaired in the mid-'90s for the White House and the Congress on capital formation. And I had about 6 or 7 of the best savings economists in America on my little committee. And I asked them, first of all, to appraise the incentives for savings. And their unanimous conclusion, surprising to me, was the effect of these incentives is both limited and ambiguous. And I said, why limited and ambiguous? And they said, because many of the people who take advantage of these tax incentives would have saved anyway. And you have to charge the cost of the tax incentive to get to the net increase in savings, and it's small. Well, I say, you tell me America must save more for all the reasons we know. How do you think we have to do it? And to my surprise, these were Republicans, Democrats, Independents. They said, basically, you have to move to what Singapore, Chile, Australia, and a few other countries have done. You have to go to mandatory or automatic savings, in which you automatically take a certain amount of the income and you put it into funds, but you don't let the government spend it. Because if you do that, the same thing will happen to that happened to Social Security, where the so-called trust fund, which is an oxymoron, it shouldn't be trusted, it's not funded, the money is spent for other purposes. So I think a very interesting emerging question over the next year or two, as we get the full magnitude of the risks of this much foreign lending, will be, how does America save more?
Well, as someone that knows a lot about the intersection between politics and business, what's the likelihood that we're going to get any movement on this issue, let's say, in the next year?
One of the reasons I put all my money, or most of my money, in this foundation is to try to educate, motivate, and activate the American public. I would have to say I have plenty of friends who believe that America has become so short-term oriented that it'll take a crisis to get them to take action. There's an aspect of this problem of foreign lending that you mentioned at the beginning that we haven't discussed, which is the geopolitical aspect. In the same way that these countries have a financial guillotine in their hands that they can use for economic purposes. That same guillotine can be used for political and geopolitical purposes. You may have forgotten the case study of the Eisenhower years, where the French and British decided to mount a military action against the Suez Canal. This was directly contrary to American policy. So guess what happened? The Americans were holders, as the Chinese are now, of huge amounts of French and British securities. Got a hold of the French and the British and said, what you are doing runs very counter to what America believes is the right policy. If you continue on this track, we will have no alternative but to dump a lot of these securities. Within 10 days, the French and British had pulled out of the Suez, and there's no reason that the Chinese can't do the same thing.
Is there a mismatch in terms of time horizons between the way the U.S. government works and the way you believe the Chinese government works? Do they have a much longer time horizon?
They tend to have a longer view, but I had a meeting the other day with a senior Chinese official I've known for a long time. And I was interested in the trend of that discussion, and I don't know to what extent he reflects whether there's an overwhelming attitude in China among officials. But he said, Peter, he's known me for many years, you've been concerned about fiscal responsibility and budget deficits, but you've been talking when the budget deficits were a few $100 billion. You're now talking about $2 trillion a year. Furthermore, do you know that we have our own stimulus program, which is bigger than yours as a percent of the GDP? Do you also know that our export revenues are down 25%? Where do you think you're going to get all this money? And I said to myself, I hope not too many people are focusing on that question.